Hey everybody, it's Chris. Before we get started on this episode, I want to make an apology. I plugged the wrong cord into the doohickey here for Keane's mic, so it's a little quiet to begin with. It will get better because I realized my mistake once we were in it a little bit. You should still be able to hear him, but it will get better. All right, thanks. See ya. Hey everybody, and welcome to another episode of the Business Barbershop podcast. I am Chris.
I'm Keane.
And today we're going to talk about accounting. So get ready to be really fired up.
Yeah.
It's going to be
business owners. I hate accounting. I hate working.
That's right. It is going to be. Oh, here, let me adjust these a little bit. It is going to be interesting. I think it'll be fun. This is something that I think is important to think about and be intentional about when you are running your business, starting a business.
About opening a business that you've never done before.
Correct.
Yeah.
Correct. Okay. So why don't you just? And by the way, we're literally just trying to find something to talk about this week. Don't have a lot of topics top of mind. Keane came up with this. I think it's a good idea because I immediately disagreed with what he was talking about. So that's how you know it's going to be something good. So Keane,
Yep.
why don't you set the table a little bit, and then we'll just see where this thing goes.
Yeah. What I want to do is I want to talk a little bit about the difference between service businesses and cost of goods businesses. This is a concept in the world of business that I'm pretty sure most business degree graduates learn. And surprisingly, I had no idea what the difference was until years of being a business owner. I am officially the owner of multiple service businesses and have a cost of goods business. We actually have a couple of cost of goods businesses now, and so I do understand the concept. And then there's versions that are kind of a blend.
What are one or two of your service businesses?
Service business, obviously doing home loans.
Yep.
It's a service business. Also commercial loans, property management.
Yep.
Those are all service-based businesses. We provide a service, they pay us, and then there's expenses associated with the business. Cost of goods means that we're selling something where there's whatever we're selling, there's a cost of acquiring
Yeah.
what we have, and we sell it for a premium.
What is that? What is that you have?
The first version of that is my wife's dessert shop.
Correct.
Yeah. So the second one is our development company, because what we'll do is we'll charge like a flat fee for an entire project, but then in that is other costs that are associated with that are covered in the costs that we charge. We'll say, hey, we'll turn this whole project into condos for you. It'll cost this much money, but in that number, before there's a net gross revenue, some of that money is being used to pay for parts of the conversion, the survey work, the legal work, and so that work we're paying them out with revenue received, and then the leftover amount is the gross revenue.
But do they pay you up front?
They do pay me up front as like a deposit.
Okay, so this is where we disagree a little bit. So having set that table, let's talk about what we were sort of hitting on before we recorded about real estate brokerages, and then we'll go from there.
Yeah. What I was saying was that there are certain businesses that may not get classified necessarily as cost of goods businesses, but the way that the revenues on them are, so it's better to see them as a cost of goods business for the purpose of accounting. There's they're not exact like some cost of goods businesses have issues with them that other ones don't. So let's do a comparison, right? In my wife's dessert shop, she buys a bunch of coconuts. Some of them could be spoiled. Gotta throw that cost of goods out. Some of them will expire.
Yep.
Throw it out. Sometimes if you're a store selling goods on a shelf, maybe that product becomes irrelevant. People don't want it. You got to get rid of that inventory. You got to figure out how to get some of those costs out because they're just loss leaders. Versus there's some versions of.
So Here's the thing. I don't think you are looking at the whole definition of what makes a cost of goods business a cost of goods business.
Okay.
Because what you are really talking about is sort of loss of inventory in some way.
Well, that's just about the difference between one cost of goods business for others. Because other businesses could have big cost of goods businesses, but then they don't have the same kind of issues.
Here's the difference with a cost of goods business versus a service-based business.
Okay.
With a cost of goods business, you have to pay and buy something before someone else buys it. So it's not just
the case for it to be a cost of goods business.
It has its inventory, its accounts receivable, it's those different things which make it a cost of goods business. That's where that comes into play. You do have, because in anything that you do, you're going to have some expense associated with the service, right? You have to perform the service. You may have to purchase materials to. We have, like, for example, my law firm. We have people that have to do the work.
Okay.
We have paper.
Pretend that someone's a car manufacturer.
Yep.
They sell cars.
Mm-hmm.
If you're a car manufacturer, is it a cost of goods business?
Yes. It depends on how the financing is set up on the back end, but if they have to buy the car to get it on the lot, yes.
Okay.
It's a
what
carried
if you're a car
cost.
manufacturer that will only make the car custom on order after a client makes a deposit?
No, it's not a cost of goods business. That's a service business, which is customizing the car. Typically, they bring you because there's no accounting.
That's not what it says on the tax return.
Well, who cares what it says on the tax return?
Well, I'm only talking.
You're talking about
I'm talking about how it works for the purposes of accounting.
Cost of but with accounting, it's not cost of goods or service, right? What is it? It's accrual or cash.
Right.
Those are not those. Yes, all of those different terms though are not the same.
Whether it's accrual or cash, though.
You can do accrual as a service-based law firm as well.
Right.
But I don't because
accrual or cash doesn't determine whether or not you have cost of goods on your tax return.
What you're talking about when it comes, you don't have cost of goods on your tax return. You just have inventory carryover that you might have.
Cost of goods on tax returns.
That would be your cost of goods.
Thing on your tax return.
Cost of goods sold.
Right.
Yes. That doesn't mean that's not the same as a cost of goods business.
You're confusing all of our listeners.
No.
Between them.
What you're talking about is so Diane's restaurant or Diane's dessert shop is a perfect example of a cost of goods business because she has to buy stuff before people come in and buy it. It has to be ready.
Sure.
So she has to outlay that money beforehand so it's not even if the coconut goes bad. It's if people don't buy enough in time. It's if COVID happens. These are all things that can hurt you.
Efficient versions of cost of goods businesses.
In a service,
there's a chance that you're going to have lost revenue. You get to buy the stuff ahead of time. But if you still have to buy the goods and your net revenue is the shortage of the difference, to me it's still on accounting purposes a cost of goods business.
Then every business would be a cost of goods business.
It's not.
Why? How so? Tell me one that is.
Because
it's not.
The idea of a cost of goods is that you buy something and then whatever you did with it, you like. Picture a restaurant, right? You buy ingredients. At the end of the day, the ingredients end up being what you sold, but you made it into a dish. So you had to buy these goods and then turn it into your product.
You have to pre-buy the goods.
I don't think it matters if it's pre-bought or not. At the end of the day, you're reselling goods. And for the purpose of what I'm talking about for accounting purposes, this is where a lot of business owners, I think, get all fucked up when they look at new businesses they haven't touched it. When I see people who are primarily have done service businesses in the past, and they first get to a cost of goods business, they get so caught up in gross revenue because they're used to having a certain amount of percentage of money go towards expenses, and so that's what they're used to managing. And so the first time they do a cost of goods business, they realize how much less there is because before all things account for, you better redeem all the costs you put into the product that you sold before you have your gross revenue, and then you have
the cash flow is different in a cost of goods business. Yeah. You have to put the cash out first before it comes in. That's like your consulting business. I would not consider that to be a cost of goods business because they pay you first. The money comes in, and then you perform the service. Some of that may include buying things,
right,
but they've already paid you.
Yes.
So you don't have to account for that. You don't have to plan for that necessarily because it's prepaid.
The way you plan certain type of businesses where you have to pay back for other services or whatever. Like, for instance, if you're a general contractor, that's traditionally considered a cost of goods business. But very often you're not buying any of the goods until you get a deposit from the client. It
depends, right? It depends on how you do your business. They should get paid first. And in that case, I would not consider it to be a cost of goods business. They should not have cash flow problems. Where they get into trouble is the money comes in and they don't spend it where they're supposed to spend it.
I think the ones that you divide inventory up front end up being riskier versions of cost of goods business.
It's a restaurant is a cost of goods business. E-com is cost of goods.
But as a person who has all of those, like pure service related, ones where we provide something as a lump sum product where we had to higher pay for other pieces, which at times we've had it where the cost exceeded, so end up having the same risk and reduced margins at regular cost. I've had that happen.
Right. It's different.
Hey, here's a net cost. Here's a total cost of this product, and we foresee bid all of the estimated costs to get to the finished project.
Yep.
And if it ended up being that the other subservices and products we bought to get to the end product ended up exceeding our total cost, we've lost money on it before.
Correct.
Before we ever had a revenue to try to split up towards normal expenses, like
think about it like this: if they're going on Shark Tank, it's a cost of goods business because the reason they're always going on Shark Tank is why they need money so that they can buy more inventory or buy more manufacturing or buy more something to make the things that they're trying to sell. You don't ever see real estate brokerage.
But I'll tell you that as the owner of businesses that operate with the same way that margins work on a cost of goods, to me, when you run a certain kind of businesses where you are for sure paying out other, products and services before you have a gross revenue, then the way you do the accounting for them should look more like a cost of goods business.
Well, what you just described is a cost of goods business where you have to pay before you receive.
No, but I'm saying yes, but sometimes when we I think that you think that we're only paying for the things at the cost of where the deposit we get supersedes the cost of what we're putting up front. What we'll do is we'll very often collect the deposit, you rack up these different costs, and sometimes the cost will exceed how much our deposit is. So if this doesn't finish out, we're not getting paid. The second amount comes in at the end, we pay out, everyone gets paid out, they're supposed to get paid out, and then we keep a margin of the difference. I still see that as a cost of goods business.
Well, if you're fronting the money,
sometimes, yeah.
Then yes. But what you're talking about is
sometimes, yeah. It's just for us,
if the deposit runs out, I would ask for more deposit. Is what I would do.
Yeah.
And maybe you don't. I mean, I know in the industry that just might not be the way that things work. But I'm just saying.
But why don't we do this? Why don't we get really focused on a traditional cost of goods business, and then we'll talk about these in between ones, and whether or not they're defined as one or the other.
Sure.
I really want to get focused on pure service-based businesses and what kind of expenses people should typically expect in that category.
Okay.
And then when we get to cost of goods, we'll break down how cost of goods works and then how that flows into. Because really, once you understand the accounting of both, this is what we do know. I think you will agree with me on this. Whether you're a cost of goods business or service, right? One thing is for sure, and the tax returns even flow this way, so it's easy to see it. Pretend that your business is a service-based business. You do $1 million worth of service revenue, and then you have a line item of a bunch of expenses. These are going to be employees, utilities, rent, right?
It'll be things. It's basically things that you need to perform the service. Could be people.
Right.
Could be some material. Could be
facility, employees,
correct.
Utilities run the facility, advertising costs. So there's certain kind of business expenses. Which, I mean, if we went through a list of them just by going through a traditional P&L or just going down the list of what's on an S-Corp tax filing, it makes almost all businesses have variations of these costs.
Correct.
Right?
Yep.
So if it's a service-based business, the idea of it is that you provide a service, and then you get this revenue, and then you start subtracting these expenses that very often are found in most businesses, like rent, mortgage if you own the building, utilities, employees that might work in a business, right? And that's one of the differences also between being self-employed versus being a corporation of some type or an entity. Obviously, you can have a sole proprietorship, so have employees, but one of the first things is that when you think about I have a business that's more than just me providing a service. You could be self-employed. I could say I'm a self-employed electrician, and I don't work for anybody, but I could have 0 people working for me. And then my expenses are minimized because I might be minimizing what I pay in rent. I don't have employees, right? So there's almost kind of 3 categories. There's the service people who don't hire anybody, right?
They'd be a solo, sole prop kind of a person.
Real estate is a really good example of that.
Yes.
Right?
They have
category 1.
They have low expenses, but their revenue is capped at the time that they can spend on any particular thing.
Exactly, 1,000%. And there's a lot of attorneys who will operate and have their own private practice, and they don't have other staff attorneys, and they fall in that category.
100%.
Right? So, I think we should really break this down kind of a couple categories. One is a service-based business that doesn't have employees.
I would call them solopreneurs in a way.
Solopreneurs.
Right.
And for everyone that's listening, let's just stop there and talk about that category. In that category, I believe that if you're spending up to 50% of your gross revenue in expenses, you might want to talk to someone about getting more efficient, right?
Yeah, there's just so many variables here because what I would say is
I agree with that, But in general, there's this kind of range.
Yeah, well, here's why I think it could be variable. It depends on what you're trying to do. I think most people start in this category. Okay, like when I started my firm, it was just me. I had no one else.
Yeah.
If you and depending on when you looked at my expenses, you may say to yourself, okay, well, something is in range, something is out of range. But if you want your business to grow, there will be times when your expenses are higher because you have to invest more stuff.
1,000%.
So that's the tricky part.
Expenses come for the purpose of scaling.
That's the trick. Yeah.
My point when I say that, you want to watch. The reason why to me 50% is a red alert line is because it's not a red alert if what your expense, like, because remember, this is,
if you're not investing, it's a big red alert line.
Right.
It would be, I would say, like 40. It depends on what kind of, like for an attorney, if you're over 40% expenses and you're not like reinvesting to grow, like you are just giving your money away to someone.
Right. Like here's right. So here's an example of this. Because remember, this is a service-based business without employees. Without employees, right? So if you're like, I am dying for business, so I'm gonna go spend this ridiculous marketing budget on shit I've never, like, I see agents, like, I'm telling you, I see this shit all the time.
Yep.
People's picture on like a fucking shopping cart at the grocery store.
Yep.
Like a billboard for a real estate agent. I'm
Yep.
just like, do you really think someone's gonna pick their agent because of the face on a billboard? Now, I do think that in some places where you're a service-based business, maybe it makes sense to do that. Like what if you own like 1-800-INJURY or whatever?
Here's where it works.
Who knows?
Here's where it works. If your plan and your budget allows you to be everywhere, then you should do it.
Yes.
If you're on 10 billboards in 10 grocery stores on the radio, then you should do it because it's a brand play.
Right.
You
what
want to
some people will do is in hopes they become that person, they'll pay the advertising.
That's right. You can't do it that way though. You have to go all in, 10x on that type of thing, or nothing.
Right. But even if you're doing that, you're already planning to scale where you're probably gonna have multiple attorneys. Like you can never like if that were to work.
Yes.
If you actually achieved, Mission Impossible, right?
Yep.
And everyone was calling you as an injury attorney because you're on every shopping cart in every grocery store and every billboard on every major highway of a major city. You for sure do not have the bandwidth to service all those calls.
100%.
Okay. So do not go do that shit when you're solo with no employees and you have not earned it yet.
Correct.
Right? You shouldn't be. And if you're anywhere near 40 plus in expenses and there wasn't a real strong purpose for your expenses, you're paying too much in rent, you're trying too much on some exploratory marketing scheme that you haven't done before. Like I see agents that'll do this. 90% of their business comes from past clients, referral partners, and signed calls of their listings, right? And a couple of business people they network with. And then like 10% of their business will come from a geographic farm. And the ROI in geographic farm is lower. So if the marketing budget on the geographic farm is a little bit more than the marketing budget they have on their database, it kind of makes sense just because the ROI is lower.
Yep.
But then I'll see them do like 2 client events a year and no networking events that they host themselves.
Right.
And they almost like ignore the highest ROI space.
Yep.
And they think, well, I want to try to dominate this neighborhood. I'm already farming, so I'm going to go from my $30,000 a year geographic farm budget and blow that up to like 100, paying for it with the revenue they made from their database. And I'm like, you should be hosting networking events every single month.
Correct.
You should be doing a client event every quarter. If you
Yep.
should be doing that. I mean, if that's where making your most.
You should have a written email newsletter that you send out every week. Here's the thing: people don't want to. People don't. Everything that you do pretty much always until you get big enough to like really advertise is relatively cheap. It's just not super fun when you do it at the beginning because it's new.
Yeah.
Right? Creating content.
Right.
Super effective. Nobody wants to do it. Networking. Super effective. Nobody wants to do it. Writing an email newsletter every week. Super effective. Nobody wants to do it. You don't even have to. The other thing too is people think they need to be talking about you know, like for example, we'll make content out of this today, right? People will see that. They will still want to work with you like in your mortgage business because it's just interesting and it's helpful. You know, you don't have to be talking about real estate 24/7. You don't have to be doing a market up. You don't have to wait until the next market update comes out for you to make a piece of content. You know, talk about something that's interesting. And people just won't do that. They would rather pay, you know, Zillow an ungodly amount of money for shitty leads that are never gonna materialize.
Yep.
They'd rather pay somebody multiple thousands of dollars to do like SEO on their website, which is stupid, you know, rather than do exactly what you said, which is really what works. When people tell you when people in your position say you should do this and this and this and this, people should just do it, right? Monthly networking happy hour that you host. Great idea. Quarterly client. I mean, whatever. If you say quarterly, if I was a real estate person, I would do quarterly. You know, and that's where you get in trouble. That's where you get over your skis from these expense ratios. You know.
The one thing that's also, before we move on to the next category, what I think people should also understand is this: there are fundamentals of businesses, and every business is different. And so as we have these debates about what you should or shouldn't do in different businesses, one thing's for sure. There are times where you're entering an industry and people get inspired by disruptors. And because of that, they want to not pay attention to fundamentals. But just because, like, what's a better way of putting it? Just because Uber blew up the taxi cab industry, and just because Tesla is disrupting the automotive industry, doesn't mean you shouldn't be paying attention to fundamentals related to the industries still. So I'll give you an example related to both. Some people will be inspired by the disruption that Tesla is doing, which, hey, even the Berkshire boys, right, which I guess they're not boys anymore because Charlie's gone, but even Charlie in the last Berkshire meeting talked about, they don't own Tesla, but they got to give props to, like, hey, how many generations has it been since we've seen an American car manufacturer enter the space as a major player?
Right.
Like, they recognize, like, hey, they may not own Tesla, and they may not understand how people are evaluating their stock at the price per share that they are, right, to the point that they'd be comfortable investing in it. But they can recognize that they've done something special. But here's the other thing I would say about Tesla. We can say, oh, look how different everything is, from vertical integration, everything designed around electric versus, like, because, you know, I can see how they got ahead of the other auto manufacturers because, you know, when you make a Chevy, you know, Tahoe or a Honda Civic, even if they make a lot of the parts in-house, there's still a little bit like the spring made from the spring manufacturer. This fuel injectors are made from this company. It could be Bosch or whatever, right? It's kind of like pulling all these parts together, and some stuff they do in-house, and some stuff they have people manufacture and send it in. I think that Boeing's a good example of that with all the shitty news that they're getting these days from manufacturers who send stuff in for their planes. So understand that concept, and what Tesla's done is they said, well, how much of that shit do we don't even need if we just were focused all electric from the beginning, right? How much stuff in the drivetrain gets pulled out when there's not a traditional transmission, a traditional engine, where we have electric motors at every wheel. They actually power how much goes to each one, so the differentials comes out, all the power that gets translated to transmission. It's like you just redesign everything different in terms of how the powertrain's done, right? So much of that got disrupted. But imagine if Elon said, and guess what? Our car is going to be so efficient, we're not going to pay attention to aerodynamics. We're going to operate these things on 3 wheels.
Right.
Right? And you'd be like, yo, it's okay you're disrupting some of this stuff, but
yes,
you should still make your cars have a safe, light, tubular frame, right, with aerodynamics and forward-inflatable tube tires on your wheels. There's still fundamentals you don't violate. And the reason why I give that as an example is because there are so many people who enter an industry and are so focused on disruption that they've missed their fundamentals. It's like an offense in basketball that says, like, we're going to come up with this beautiful offensive scheme that's going to, like, confuse everyone, and they forgot to teach people how to fucking dribble and shoot.
Let me have some breaking news on here for all of you listening.
Yeah.
You are not Elon Musk. Okay? You are not Warren Buffett.
And let's be crystal clear.
You are
if
not
you are
disrupting
those people,
shit. You are not going to be a disruptor. Elon Musk, to get to Tesla, did a whole bunch of other stuff before that, way before that, for his whole life that led to Tesla. He's a freaking crazy genius dude. He figured out how to land a rocket ship on a platform in the ocean on the way down.
right?
Okay? When you are trying to start your business, I think that there are fundamentals that apply to almost every business that you need to focus on at the beginning before you try to do anything else. And for your basketball analogy, you do need to learn how to do a chest pass. You need to learn how to dribble with both hands, how to shoot a layup. You need to do these things before. For example, when I talk to new law firm owners, what I tell them to do is this. You need to start making content right away. You need to start doing an email newsletter right away. That's not going to get you any business for quite some time. While you're doing that and you have all this free time because you have no clients and no work to do, you need to be networking. I hate networking.
Yeah.
But when I started my firm, I was having 2, 3, 4 coffee meetings every day.
Yeah.
Because that's what you have to do. Now, I was trying to stop doing that as soon as I could, but I understand.
It works.
It does work. And if you have nothing, it is the fastest way to generate some business is to get out there, talk to people that know people or are talking to people that you can help. That's the fastest way. All this other stuff will work over time, and it works really, really well. But it's a compound interest kind of thing. You know, you have to continue to consistently. And networking is too, by the way. Networking can do that. You know, and eventually, I think what happens is you start to do all of these things. You don't ever stop doing any of them, but you realize these 1 or 2 things I really, really like, or I'm really, really good at. And you really put the hammer down on those things specifically, you know, while you're still doing the other things, right? I hate networking. I still do it, you know, I just don't do it very often. Right. Because it is effective and it is helpful.
Well, it's one of the reasons why we decided to start the show because the traditional networking, like when going to an event, sometimes planning to do that kind of drives me nuts. So I try to cheat. So I'll do it in a way where it doesn't feel that way.
Yeah.
Like whether we like it or not, this is technically us networking, doing a show together. I don't know how many deals I'll get referred to me from Chris and how many people I send to him in the next 12 months, but we're still referral sources. But we ain't thinking about that shit when we're doing this.
Well, and this is also a perfect example of like killing 3 birds with 1 stone.
Right.
Because we're making audio content. You're making video content that you can use. That is effective.
We got to have our face-to-face, keep our relationship going, and when we have guests, we got to stay connected with them as well, right? Which I do like to find the.
And for you, see, like for me, the networking part is not that big of a deal because, like having people in is not that big of a deal. But I know for you, it's really nice to be able to have people come in. It's kind of special and fun for them,
right?
Because they don't do it very often,
right?
And it does still get them some other sort of exposure, you know.
100%.
So it is, it does. So if you can find ways to do all those things together, it also, by the way, for you in particular, was nice because I knew it would eventually get you into making video.
Yeah.
And
that was a big goal of mine.
So it's like a sneaky way to try to like set this up so that you would start doing it because I think
I was very resistant to it.
Yeah. I think as you continue to do it, you will start to really see some momentum gained from it. And
honestly, the weirdest way possible, the biggest benefit of me doing that was getting comfortable just being recorded.
Yeah.
You know?
Yeah. It's just like anything.
I already knew that there's going to be some long-term upside to doing content and social media and all that stuff. You didn't have to sell me on the benefit.
Yeah.
It was that for a long time, someone would stick a camera in my face and I would freeze, you know, like a possum on the road. You know, I just didn't do well with that shit, you know. And kudos to everyone that does, right? But in my heart, I've always been a conversationalist and then conversationalist first, and I'd say an educator second.
Yeah.
So people ask, like, why are you so afraid of talking in front of a camera, but you're not afraid to talk in front of a group of 50 to 100 people? Well, it depends. If you said, get in front of a group of 50, 100 people and tell everyone how great you are, I'd be like, I'm not really down for that, right? But if you said, go in front of 50 students and teach a topic that you're well versed in and my goal is that they leave empowered and educated, I'll do that shit all day long. Because I'm not trying to impress upon them my knowledge to prove how smart I am. In my head, when I'm teaching, it's I want you to leave with what I have. And so the thought process, the way I process it in my brain shifts.
I think here's the other thing I think though. How many presentations have you given in person?
I have no idea.
Many.
Yeah.
At the beginning, the very first one that you did, you probably were a little more nervous.
I was more nervous, but what I just said is what got me over it faster.
Yeah. But it's the same with video, right? Like the more you do it, just the more comfortable it gets. It's not fun at your first networking event. Is sort of not for everybody. For me, I don't like it. So it's I don't like to just meet random people and like try to talk to them. I don't like that. But the more that you excuse me, the more that you do it, the better you get at it. And I think it's just one of those things where you have to push through that discomfort and know that when you get to the other side, it's not gonna be as bad as you thought, and it will get easier.
So one of the first things, and I really want to touch on this, let's stay in that first category.
Yeah.
Expenses, typical for that range. I think it should be less than 40%. If it's service based and solo.
Here's the other thing too. Here's why. Also, when it's just you don't need a big office. You may not need an office at all to start. Like for me, for example, I had a windowless, very, very tiny office just because I like to get out of the house. But all I really needed was a conference room, someplace to do signings. That's it.
Yep.
And if you're a plumber, you don't need an office at all. You need a truck, and that's it. Same with real estate, all those things.
And look, I think Field of Dreams has got people fucked up. And this is one of the reasons why I bring this shit up.
Right.
Because what do they say in Field of Dreams?
If you build it,
you will come.
Yeah.
And we will not say mutual friends that we know who have done this, but we have had colleagues, business friends, whatever you want to call them, just put themselves in world-class, A+ location, commercial grade, steel, concrete structure, real estate with premium rents. And I'm just like, but the only one who's generating revenue in that shop is you.
Well, and here's the other thing about that. It's a true fact. I don't care who you are. If you disagree with me, you're wrong. The only people that care about your office space are going to be ultra luxury clients that want to feel like they're paying you so much money because they get to experience working with someone that's super duper duper expensive.
And here's one thing to remember in that. Okay, the person that we know that did it in a real estate platform.
Yeah.
And you could say, well, I want to get ultra real estate clients, which that person I know does get those clients. But here's a problem. If you're an extra luxurious, high-level business attorney who wants to press your clients, and that's the real estate you're in, that makes sense. Because even if you are a multi-millionaire or billionaire and you're hiring an attorney, and they said, I want you to meet me at my office. If my attorney says you must meet me in my office for this meeting, right?
Yeah.
I would drive to them. And then I will be impressed upon by what I see in person.
Yeah, but here's the thing.
But you're selling real estate.
You're going to them.
That's correct. That's correct. Who are you bringing to your real estate office? At best, you are going to maybe bring like investors, right? But even so,
it still doesn't matter.
It doesn't matter.
It only matters if it's shit.
Yes.
It does not. It only matters if it's terrible. And what terrible means is like dirty. I don't know, hard to find. Parking sucks. Convenience of getting there, and then when you get into it, does it just feel like a regular office? That's all it needs to do.
Mm-hmm.
You just need to not be walking around going, like, is this place about to fall over, or like it smells? I don't know, right? The standard is, and here's the way I always try to think about this is, I try to think about the way that I experience things. That's the way that most other people are experiencing things. Like when you walk into, like when I walk into your office, I'm just like, okay, I'm in an office.
Right.
Like, it's a nice office, but
it's
just an office.
It's nicer than it needs to be.
Well, it is. I would say your office is like on the higher end of like the normal standard. But still, when most people walk in, it's not like they're overly impressed. It's just like they just are an office, right?
Like when people ask, oh, would you maybe consider upping your rent and going to like the Southport where you're on the lake? I'm like, nope, 1,000% no,
right,
1,000% no. And that was look. I'm not talking just to people listening to the show. I'm talking to my former self. I'm just being as honest as I can be, right?
I had dreams of having some fancy office in some place, and then I was like, and then here's what happened. I had an office in Queen Anne for a little while, and it was not necessarily like a super nice office. It was just expensive as fuck, and I every month I had to write this rent check, and I'm like, that money should be going into my pocket. Yes. You know what I'm saying? Not someone else's pocket, because I'm not receiving the benefit of this check that I'm writing, for this space.
Yep. Look, everyone listening to the show, I'm gonna ask the question, right? And I'm gonna state it. There's only three things that will make you more money in your business. Everything you can think of, there's a million things you can think of that'll make you money, but they all fall underneath three large categories. Either A, you do more, whatever you're already doing, you do more of it. Let's say you're a real estate agent. You sold 20 houses this year. Okay, if nothing else changes and you sold 40, you're making more money.
Increase the volume.
Right. So one is increased transaction count. The second one is increased transaction size. So if you're selling, this is the reason why, like, I appreciate Gary Vee doing like the whole garage sale thing, and he might find some real gems there. Mm-hmm. But the reason why that doesn't end up being a good replacement for his daily job, the ROI is great in terms of like margin of what you acquire versus what you sell, cost of goods business, right? Buy some trinkets out of garage sale, sell it for way more on eBay. That's a really good example of like really high margin cost of goods business, right? You pay eBay a little bit listing fee, you pay for a discounted trinket, you're doing the work yourself. There's not a lot of expenses, right? Is what's the price of these things that you're selling? Even if you're selling it for 2, 3, 4,000% more what you bought it for, but it's always like $5,
right?
It's hard to live off of that, right? So if nothing else changes but your transaction size increases, that will make you more money. And the third one is margin. Margin is going to be.
Let me say one more thing about number 2 real quick.
Okay.
Because when you talk about transaction size, you're not always just talking about taking a bigger piece of the pie that you're creating. What you're trying to do is either make the pie bigger or add on another pie. For example, increase transaction size. Would you like fries with that? Mm-hmm. That's a perfect example of increasing your transaction size.
Right.
If you're a real estate agent, maybe you have like an affiliate deal with a stager, where you have this exclusive stager. They're super awesome. When they come and stage a house, maybe they give you a little kick, right? Something like that. There are all of these different ways that you can increase your transaction size that aren't just about taking
exact same item sold for more.
Taking 6.5% instead of 6%. You find a way to make the pie bigger, add on some other side service, you're trying to make every transaction bigger by sometimes just adding more to the transaction, adding more value or
there's
something.
No question there's complexities depending on the business style. So when we talk about these, everything falls into these categories. Chris is actually absolutely correct. I remember specifically talking to like a Best Buy executive, and their computer department, which I'm not sure if this is still the case, but their computer department, if you took the margin of what they make on the computers alone, just computers, this is their laptops, your desktops, and then the space that it costs them to run that, and the employees that run it, it's a loss leader. They lose money on it. So why do they do it? Because they need the electronics consumer who to think, when I want something of a general consumer electronics category, I will go to blank. There was a time where that model made a lot of sense, and I think it still does. I think Amazon's killing them in a lot of that space, right? But there's still right? Best Buy's still doing okay, right? They're doing fine. I won't say that they were dominating as much as they were in years past, but I think that they have a foothold in their market share, and they got rid of a lot of their competition. So in places like Sears used to do a blend of that stuff, appliances, electronics, plus also clothes and whatever. It's like they shoved them out of the way and said, look, we're specialists in this category. We're only doing this category. And then other people tried to compete with them. There was a Canadian company called Future Shop. There's another American company, I think it was at Circuit City, right? Other people tried in that space, and Best Buy ended up being the winner.
Yeah.
And they're kind of holding that foothold.
Yep.
And they need everyone to think about them when it comes to buying something of electronics.
Yeah. Let's take electronics, for example. I'll tell you where you can increase your transaction size. You go to buy a computer. It's great. Would you like the warranty for that?
Yes.
Yes, I would. There's an extra $100, $200 on your transaction. Do you know how to set your computer up? Because we have these people over here called the Geek Squad.
Yep.
And that's where all that other stuff comes into play.
Which is a service business.
That's right. But it increases the transaction size for this computer purchase.
Right.
Right. So these are the different things that you can do when you're thinking.
It's brilliant, because what happens is there's three things that Best Buy. There's really 4 goals of why Best Buy keeps that computer department in their store. One, they can sell warranties, which is, as a insurance is, well, if you're an insurance agent, that's a service business, right? But it's, I guess, it's kind of a product.
Well, I mean, it is. I would consider it to be a service in some way, because what's happening is there's going to be some incident where you are going to be the end result is a check, but you're still you're processing a claim.
I think insurance represents this kind of in between category that we're basically getting a debate at the beginning of the.
But there's still no cost of goods sold. They give you the money.
There's a cost associated with that business that isn't in other service businesses, which is going to be claims.
Now, so that is the business, though. That is the business.
Right. I mean, at the end of the day, insurance business is very unique in that way, that it feels like it's all service, but then you have to subtract from it your claims, which is almost like a massively discounted cost in terms of like.
Well, there's a lot of math involved in insurance, and you can get if you don't just open an insurance business on your own, the math is important.
But if you know what you're doing in that space, it can be one of the most profitable. And Best Buy knows that. So when they provide warranties, that's a form of an insurance product.
100%.
There's a percentage of them that will file claims. Most of them will just be a sheer profit.
Here's the thing, though. Here's what I'm not 100% sure, but I'm 99% sure happens. This goes hand in hand with my staging affiliate deal. Okay?
Right.
You think Best Buy services all those warranty claims? No. There's no chance. There are companies out there that create and supply these warranty services, and Best Buy just gets a cut.
Yep.
Every time they sell a warranty, they get a cut. It's literally 100% profit on top of what they have made on a computer, right? So that's what you need to look for, right? Trusted partners. The thing is, if you're going to do this in real estate, if you're going to do this some places, it's going to be hard to do until you have enough transactions to make it worthwhile for the other person. It's very difficult in like these service-based businesses to do that, because the transaction volume is it's hard to get somebody to buy in with you on that if you're only going to send them 3 people a year,
right?
You know? But maybe you as a real estate agent hook up with your whole team or your whole office, and you reach out to somebody. If I was a stager, I would 100% do that.
Yep.
Like your 50 agents are going to contact me anytime they need staging. That'd be awesome.
Right.
I'll give a discount to your client, tiny. I'll give you a cut, whatever.
Right.
And I get to keep the rest.
Right.
That, by the way, is that cut that you're giving, the discount that you're giving, and the cut that you're giving are replacing the money that you would have to pay to try to market and advertise your business.
Right.
Those would be advertising and marketing costs for me on the.
A lot of times your marketing
balance,
is what you do and how you do it and how people perceive you.
Yeah.
So I could be wrong. We had a Best Buy exec in here, but here's what I remember.
Yeah.
That they said why they have the computer department. There's 4 benefits to it. One is you just talked about it. Now they have a product that can sell with a warranty. The margins go up because obviously the warranties are very profitable.
Yes.
Right. The second thing is they could sell a service. Services are also higher margin. Geek Squad, right?
Yep.
Similar to we talked about why is it cost of goods businesses so different than service-based businesses? Because in cost of goods you have to reconcile the cost of your sales to what you paid to sell that product before you have the exact same gross figure to cut those same expenses. So let me just say it again in case you guys aren't picking up on this. And one of the reasons why I thought about this topic today was because I saw a post on Facebook, and this is literally what it said. I'm thinking about buying a restaurant, and it generates $100,000 of gross revenue per month. What do you think I should spend to buy it? And my first reaction to that is, are you sure it's gross revenue or is it sales? It's probably sales. And it's probably a service person asking because they don't understand the difference. If you have $100,000 in sales and it costs you $90,000 in goods that you're reselling, right? Then you only have $10,000 of gross revenue, which then has to reconcile all the other expenses that a service-based business would have. Okay, now let's subtract employee wages, rent, utilities, advertising costs. So the big difference between cost of goods versus service is that once you've reconciled the cost of your goods, you're left with the same number that service businesses start with. That's typically the biggest difference between them, right? Now, of course, rent, employee costs, they all vary. Like you could argue in a service-based business, let's suppose that you have staff attorneys not being paid a revenue split or whatever, right? That, you might have high service-based costs, but your employees might be more expensive because, attorneys just cost more than your McDonald's. You could say, oh yeah, McDonald's is going to be a worse business because you have cost of goods plus you have employees' expensive rent before you have revenue. Mm-hmm. Yes, but let's be really clear. The employees at McDonald's make a lot less than the ones in your business, right? Yeah. Same with mine, right? Yeah. Mortgage professionals with 10, 20 years of experience cost a pretty penny. Mm-hmm. Very often more than some staff attorneys.
Yeah,
right?
For sure.
So it doesn't mean that for sure service businesses are better than cost of goods, but it is really important that people understand the differences. So let's go back to that category. So there's 4 things that Best Buy hopes to get. They have insurance, which is a warranty product, service, which is a high margin product because a lot of the facilities of what they have for the service business is already there. They already paid for the space. It's just the employee cost of running that department.
Right.
It's and then a little bit of advertising to have that department, but there's a lot of vertical integration on these costs because it's already built in.
Yeah.
Right. And then they also have really high margin accessories. Best Buy does not sell their cables at the cheapest margin. Like for a person, so I used to work at Magnolia Hi-Fi, which was when I was in college, and they got bought by Best Buy, and we got discounts at Best Buy, and we got 10% above cost.
Yeah.
And the first thing that stood out to me was the fucking wires. You buy a $50 cable, and then I get 10% above cost. I go ring the thing up. It's like $4.
Yeah.
Right. So high return accessories. Right. So those are the first 3, and the last of the 4, which is a big one, which is the consumer perception and buying habits. That now is this a category that's essential to make sure our customer still comes back to us? We want people who love electronics, who wants to look and touch at the newest, coolest, whatever. Mm-hmm. They might be one day a computer person. Tomorrow, they might be buying a TV. The next time, they might be buying a home theater system. The next time, they might be buying a cell phone. The next time, they might be buying headphones. But they always see high-end consumer electronics as a thing that they like. And so the consumer experience of saying, where's the place I'm going to go experience all of these products? They need to be, who are they going to think of?
Yep.
Because there's only so much that you can get from customer reviews and looking at things online on Amazon. Sometimes you want to look, touch, and feel it yourself, right?
Yeah.
Which is why, even Apple stores still make sense, right? And they do quite well.
Yep.
So moving on from the first category, which is a solo service business, I would say is where that same business kind of graduates to, which is a service business that has employees, right? Mm-hmm. Now, when you get to that category, if you are spending, more than half of your gross revenue on expenses, then that's more acceptable in the space because one of the biggest costs in service-based businesses that scale and grow is going to be employees because there's only so much you can do as a sole proprietor. So imagine you start off with, I'm a doctor who does house calls, and now I have a clinic, right? And the first thing you're going to probably do is before you hire other doctors, because doctors are really expensive,
Yep.
and you don't want doctors doing nurse work or answering phone calls because it's not efficient use of their time. The first thing you should be doing is getting support staff to maximize your service that you can do.
Right.
And this is also another mistake. Most people go, oh, I'm too busy. I'm going to hire a duplicate of myself. You already get paid a lot. So hiring another person that's expensive is inefficient.
Yeah. Let's use this doctor example. So if you're on-call doc, you'll do house calls and stuff like that. The first people that you're going to hire is going to be probably someone to answer the phones and set appointments for you.
Yep.
For in this particular instance, somebody that does the billing.
Yep.
Right, on these things.
They probably could be the same person.
They could definitely be the same person.
Especially if you're smaller.
And then 3, which people don't think about, but which you should definitely do in this day and age, is someone to ask for reviews when you're done with the service.
Yeah.
Okay? Because there's no better way to just sort of like build street cred than to have a Google Maps listing that has 100 reviews on it that all say you're amazing. Right? And what happens is you may think to yourself, well, I have to pay one person or however many people to do this. But the difference though is now instead of being able to do 5 calls a day, you might be able to do 10 calls a day. So, and your expenses might go up by a third. Okay, let's say. So your expenses go up by a third, but your revenue doubles.
Right.
So you're actually you're getting a smaller piece of a much bigger pie.
Right.
Right. So your income, what you end up netting, continues to go up, even though you have to pay some more expenses out.
Yes. Because you can also scale your transaction size because of what your personal bandwidth. Now imagine that you said, okay, I'm a doctor. Now think about how ridiculous this sounds. I'm a doctor, and I got so busy that I hired other doctors. And when someone calls a clinic, it just round robins a bunch of cell phones.
This happens all the time in law firms.
Right.
All the time.
Right. But imagine it round robins a whole bunch of cell phones of expensive paid doctors who then have to act as receptionists, compile an appointment on a calendar that everyone's operating off of. Yep. Everyone's trying to get as highest paid, and then there's no efficiencies. And everyone is basically doing $10 an hour work, $50 an hour work, and $100 an hour work.
Plus, what if everybody's busy?
Right.
It's like for the attorneys, I'm like, the first thing that you need to get is somebody to answer the phone for you.
Yes.
That's it.
Yes.
Especially if you're in a highly urgent, if you're in criminal defense, if you're in divorce, things where people are like need to take action right away. If you don't answer the phone when they call, they're just calling somebody else. Like you are just literally losing out on business. You're missing the forest for the trees on this.
Yeah.
And that also goes to client service. So then for all these clients that you have, when they call, you can have a process for how you handle them. They're not always calling you all the time.
Yeah, a graduation might look like this. When you get so busy that running around from each person's house starts to take up a lot of your time, you might say, because people always picture black and white. I'm making house calls today. I would like to operate a clinic with 4 different doctors, nurses, support staff, have everyone come to me. And they try to leapfrog from A to Z too fast.
Right.
A graduation to this probably looks like this. You start with one day. When you start to get too busy, you pick one day where you can double, triple how many appointments you can take, but that one day you're in the clinic all day. You might rent a clinic space for one day a week, and then on that one day, you say, oh, I'm too busy to come today or tomorrow, but I have a clinic day on Thursdays where I can see twice as many clients because I'm not driving around. So that will when I get too busy, I will slot out one of those days first, and then I can increase how many appointments I could take in that one day, and then that will take that overloaded workload and bring it down some. But people try to shift to go, oh, I'm only going to do house calls to I'm going to have them all come to me. There'll be a day where you can graduate from having to do house calls, but that's going to be after you're already too busy.
Right. With
4 clinic days, right?
Yep.
So it starts with 1, and eventually you add a second, and then there'll be a third, and then you do house calls on 2 other days, right? Like for instance, in my world, I don't work and take appointments every evening, right? Just have some work-life balance. But there are still a couple days I still do it, right? Yep. And I'll still take an occasional phone call over weekends or whatever, right? But it first starts off as like a free-for-all just to get busy enough. and then you just graduate from that, right?
Correct. At the beginning,
Step
you're
by
just
step.
trying to do whatever you can to get some business.
Yeah, but you
That's
have to be
it.
okay with graduation changes. Too many people want to go from A to G
For sure.
too fast, or A to Z. Just do it in baby steps.
Well, yes. What I always tell everybody is what you think is very slow, when you look back, is going to happen very quickly.
Yes.
If it takes you 2 years to go from house call doctor to full clinic, when I tell you it's going to take you 2 years at the beginning, it sounds like a very long time. But after 2 years,
You'll look back
you're
and be like,
done,
where did time go?
and you're done.
Yeah.
Now moving forward, you're killing it.
Yep.
In that time, it doesn't take that long for those things to
So
happen.
phone call, getting more people to come to you versus you going to them. And then from that point moving forward, still, you don't hire the doctors yet. The next thing is, okay, well, I'm doing nurse work, which is worth $25 to $50 an hour, and I'm doing doctor work, which is worth $100 to $200 an hour. So the next step is, once you got everyone coming into the clinic, now we're going to also hire a nurse, and we're going to be able to increase how many patients we can see, because when we see them, 50 to 70% of the work will be done by the nurse, and I'll do the last 50 to
Yeah,
70.
you could think about it 100 different ways. What I would do if I was doing this service is, when somebody answered the phone, we would try to diagnose what the problem was. Hey, I can put you on with a nurse right now for $50.
Right.
And you can talk to them. Based on what you've told me, there's a 99%.
Don't they have to be at least a practitioner to be the only person talking to the doctor, though?
No, I don't think so.
I don't know about that.
Who cares? We're talking about details here that don't matter because this is a fictitious business. Right. Then, so whatever credentials they need, just find somebody that can do that.
Right.
And then all they do is take calls all day. That's all they do is take calls all day.
There's different levels of nurses, right? There's entry level nurses that have some experience.
Who cares?
Right.
Who cares?
But
all I'm saying is, I'm just piggybacking off of your idea though. I would always just be thinking about, what is the next thing that I want to do in the progression of me getting to this place, which in this example that we're using is a full-time clinic where people are coming in all the time.
Yep.
Right. And the way that I always think about it is, what do I hate doing the most right now? I'm going to stop doing that first. Then I'm going to look at the next thing. Right. So answering the phones, definitely number one, always, pretty much for everybody.
Phone, email, calendar.
Then it's like
almost that order, right?
Yeah.
Phone first.
Then it's like, man,
phone, calendar, then email, probably in that order.
I do not want to print out estate plans. I don't want to file for attorneys, for example.
Right.
I don't want to file things.
Paralegal.
I don't want to be doing it. Yeah, so you get some admin support.
Paralegal's like the nurse for the doctors.
That's right. That's right.
So you delegate part. So then you're giving away your $20 to $50 an hour work, and then you can do only the super high level
So I'm just
work.
reviewing plans. I'm having potential client meetings. I'm having client meetings. Those are the only things that I'm doing. And then I try to figure out, okay.
Now the system's there. You got a phone. You got a person answering phones. You have a person who's help scheduling things.
Yep.
You have people who already are there for support.
That's right.
Now's the time you can start to hire other attorneys.
Well,
right?
here's what I began to focus on once that happened was, okay, I do want to hire somebody now to kind of begin to replace me in this sort of technical position. To do that, though, I need to make sure that I have a good enough flow of business. So then I really started thinking about and learning about marketing, advertising, sales, so that I had some systems designed so that when somebody came in, I could fill them up,
Mm-hmm.
And so once I filled myself up by learning and implementing those things, then it was time to bring somebody in, And what I did personally was I tried to get myself as busy as possible, I was working more than a regular attorney would because I was doing the other stuff, but I really was trying to maximize sort of my technician life so that I could bring somebody else in and they could even if they did half of what I was doing, they'd still be pretty busy. I could still do the other half, which would take a significant workload off of me. And then my idea was to slowly shift from, they come in, maybe they're doing 25%. Mm-hmm. I'm slowly moving this bar.
Yep.
So over the
slowly is key. But trust me, your business grows fast.
I'm talking about over 6 months. So over 6 months, then I'm only doing 25%.
But people will say, I don't want to do that. I want to just move all of it off. And that's, look, if for every agent who's like, I'm the greatest salesperson in the world, if I could just put deals together and not have to worry about what happens at the back end, I would crush it. I hate to tell you this. You are going to be limited by the leader and manager of a business that you are.
Yeah.
At the end of the day, I know that's a fictitious fantasy you hope to exist, but to create that, you must become a proper business owner, manager, and leader who knows how to train, how to delegate, create
why
the
it takes 6 months? Because it's like at least 30 days they come in and they don't even talk to anybody. They're just learning systems. They're drafting plans. They're doing stuff.
Feels slow.
They're just working. The next 30 days is sales training.
Yep.
We do practice sales calls every day. We talk about what are we trying to do on a sales call. I really get them dialed in on what they're trying to do. Then month 3, instead of giving them 100 calls at once, they get like 1 or 2 calls a day.
Right.
Because they're still trying to figure out the systems. They're still trying to figure out the back end type of stuff, and they got to do both.
Right.
Well, they do that, then I can see that they're doing great. Okay, well then I'll open up maybe one more spot on the phone, then one more spot on the phone, and within 3 months, within 1 quarter, now they're just operating full capacity, but really operating on all cylinders are open.
Yep.
They are crushing it, as opposed to them taking 6 months of baby steps of being 40% at capacity after 3 months.
That's why you can't discount the value of really good support staff that allows people to operate on the highest level.
Yep.
So now,
and here's one thing I'll say too. This is very, very hard at the beginning. I didn't realize what everybody wants to try to replace themselves, but I always wanted and tried to design my business with extra everybody. I wanted to have at least 2 of everyone, because if someone leaves, then all of that burden doesn't shift right back to you again, which really, really slows you down. I didn't realize how important and nice that was until we talked about this attorney of mine left.
Yep.
Man, we barely skipped a beat because I still have 2 other attorneys that know what they're doing. I'm filling in just a little bit because there's like a little bit of extra, but man, it is so much easier to sort of fill that gap when you have, extra bandwidth.
This is why I tell people, if you go into a business purely on a money goal, that could be a big mistake, and I'll explain why. An example of that, let's default and talk about like real estate agents, because we're talking about service-based businesses, and a lot of our listeners are going to be in this space. A lot of them will say, I want to make $100,000 a year, or in today's world, maybe that's 150 to 2. I remember when I first came in, like $100,000 was like first place. I'm not a realtor, but similar goals from like 20 years ago.
Yep.
So for a lot of people coming into space, they're thinking, if I could just make $180,000 a year, which is about $15,000 a month, then I'm good with this. There's a problem with that. That's 1 sale a month. 1 sale a month, if you build a business for 1 sale a month, quickly becomes 0. Right? So if you design it for multiple transactions, just so you always have something coming in the door every single month, so you really need to build a business that's designed for more than 2.5 to 3, so really 30 transactions a month. So that way, on a bad month, it's 1 or 2. On a busy month, it's 3 or 4, and you fall right around a 2 to 2.5 average, depending on the season. Now something's always coming in the door. But if you want to have enough people to support you in all these different roles, right? There's this in between where if you have a small team and there's only one person of each, then if everything goes haywire when those people are gone.
Yes.
Right.
And you have to go through that period, and it will happen.
Yep. The fantasy of what you want to have a smooth running business. And what happens is the bigger your business gets and the more people you have working for it, the more likely it is someone's going to need a personal time off. So like our branch is big enough that it seems like there's someone taking a day off every week.
Yes.
Right. So then you have to have, like you said, to scale the business to where you really want it. That's why so many businesses fall in 2 categories: a high margin small shop, or where it meets critical mass. It can operate on all these different levels, and almost never are you in the shit show like of not having enough people.
Yeah.
And the in between, where most people want to make this kind of like 200 to $500,000 net for a lot of these businesses, is where a lot of people dream. Oh, if I had restaurants that ran themselves and I made $500,000 a year, that would be enough. I said, well, I think you really need to scale this to like $2 million. You go, oh, I don't want to work that hard because then, I'm good if I make $500,000. But the problem is that the $500,000 mark is actually the crazy shit show mark. Yep. Where if you're operating a space where you constantly make $500,000, you might always be just a little bit shy that if one person quit, you're in a shit show, right?
Yep.
And so sometimes the reason why I tell people you need to have bigger goals isn't because I need you to make more. It's because you need to get past that point. I'll give you an example where I'm experiencing this in my rentals. The short-term rental space is if you have the first couple you have are kind of like kids. It's like, whether you have the right people, if they're nearby, if the property's nearby and it's just one or two and it's smaller, then if I'm figuring it out, I could always just jump in and fill the gap. That only works up to a certain size. You start relying on cleaners more, and then sometimes people are unreliable, right? And I could tell that it's somewhere right around close to 10, where things, especially if you keep them all centralized in a similar location, it starts to hum a little bit better, and I can feel it now. It's not like scaling, adding units is not as hard as it was. The next step is having staff cleaners instead of the contract cleaners. Like, you're going to be an employee.
Yep.
I can tell that the scale for us is having 2+ people who can do client communication, right? Plus 2 staff cleaners. And then we could still rely on those other cleaners we had before on a higher per basis, but they are going to be the backup. So like the relief pitchers, right? So there's a certain scale where you kind of get past this shit show mark, and you just have to be committed to growing to that level. And anything, you either commit to that level or you just keep it kind of smaller. So let's talk about those different levels in the cost of goods business.
Here,
right?
Okay, 2 things.
Okay.
I'm gonna riff on that for 5 seconds. We have to wrap up pretty soon though.
Okay.
I got to drop some stuff off that I forgot about before I left.
Okay.
And I got a deadline.
Okay.
So the only thing I was gonna say is just piggyback off of what you said is pretty much for me from day one, and what I always talk to law firm owners about. My number one goal is to design a business where I don't have to operate in it if I don't want to. Most people say, well, I love being a lawyer. I love being a real estate agent. I would never want to quit. That's okay. Fine. You don't have to quit. But when you create something that operates without you, then you have reached like this terminal velocity, and you have so many different options in front of you with what you can do. Right. You can keep doing the work that you love, which is fine. Like, you don't have to stop, but being able to stop is really nice.
Right.
And that's where things really kind of smooth out, because to do that, you need to have duplicity in all of your roles.
And one thing we talked about in the other episode, I talked about you should always operate your business as if you have unlimited options. Remember that value is relative to the price point. So in my industry, I operate very much as I will always be involved with clients, and I will be your expert. But because I understand that as the industry shifts and more technology gets better and AI helps underwrite basic loan files, the costs and margins of those loans will continue to drop. It doesn't mean that I will get replaced, but if I operate where that's too much of my client, I will be. It will be very much like the suit maker. Like the pretty good suits you can buy off the shelf at Macy's and Nordstrom's are getting crushed by like all the online people and the suit supply people or whatever, right? But do you really think that all those online measure with your iPhone has any impact to billionaires who get suits made on Savile Row? Like, fuck that. They're not looking at it. They don't want to take measurements. They want the best tailors in the world to make their best product. And so as there are industry disruptors, like value, sometimes if it's a cost value, like really good product for the cost, that's a dangerous place to operate in today's world unless you're going to try to be that disruptor and you can see how you're going to do it. So very often you have to decide what my value is going to be something that it's a value for the cost.
Yeah. By the way, you don't just get to decide that you're going to be this person. You have to be this person in some way. Like you better not. I love it. People are like, oh, I want to help 1 million people do whatever. It's like, have you done this for one person yet?
Right.
No. Well,
I help investors and tell them I'm going to make them $1 million. I'm going to make them millionaires in real estate. I'm making sure I'm really clear. If you want to get to walk a path where I am not the expert in it, I can only help you so far.
Right.
But I know how to do check. I've done developments, I've done flips, I have rentals, I have short-term rentals, I've done housing, rooming houses, I've done adult family homes. I see how they cash flow, I know how they revenue, I know the brokers that do them. Like, everything I do isn't something that I have touched with my own hands. Yeah. Very often I'm an investor doing them myself, right?
Yeah.
So.
Okay, last thought, we got to wrap up.
Yeah.
Okay.
So this is a big thing for existing business owners who want to get into new businesses. Be careful when you first look at a cost of goods business, because the first reaction is you're looking at gross sales if you're used to service-based businesses. Realtors who want to open a restaurant, right? Or maybe a realtor who wants to have their own brokerage. I know this is kind of like a debate about whether or not the commissions are considered cost of goods, but the revenue, the gross sales generated that you'll put in your tax return are so much less on your cost of goods businesses. You need to reconcile your costs to end up at the same number. So an entry-level cost of goods business might be like a food truck. You're the cashier. You might be cooking it, especially if it's like a bubble tea thing or like espresso stand.
Yep.
I'm going to ring you up. I'm going to make the coffee, right? And there might be a point where you level up and say, okay, there'll be a person who keeps ringing people up, another person who makes coffee. But like a really good example of how you can watch this kind of scale is look at an espresso stand and then go into a busy Starbucks, right? But you have to understand that there is this, like a really good margin cost of goods business might have a 50 to 80% margin on your cost of goods. And you might think like, oh, I buy this product and look, I sell it for this much more than I pay for it. Yes, but what you end up with, your revenue after your cost of goods is where you end up with in terms of your cost. Like if you said, okay, I'm going to sell this drink for $5. The milk, the coffee, the cup, the lid, the little holder that keeps it from burning your hand. Let's say that cost as a net cost 80 cents and you sold it for $5. Okay? That $4.20, if you're getting into cost of goods business, yes, that's a good margin. But that's where service businesses begin. Service businesses would take that $4.20 and then say, okay, now we're going to subtract the rent, utilities, marketing costs, employees.
To answer your question for the guy that's asking about the restaurant, you don't care. You really literally don't care about the revenue number particularly. What you care about is what is the profit, what's the bottom number, and what percentage of that is of your total revenue brought in.
This is why
that's where you start.
That's correct. That's correct. That's why when I talk to some of these real estate team managers who will not sell a single house themselves, right? And they have they brag about their volume and they make okay money, but they're not making a ton of money. It's like, okay, you created the atmosphere and the team and the support and the marketing to drive business in. But because because you're always taking a small percentage cut of the total gross sale and the agent who's assigned to it gets paid first. Even though that's a service business, your P&L will look more like a cost of goods business because you need to make sure that when something closes, they get paid first, and then you need to reconcile the rest of your costs.
I still disagree with you about your cost of goods because the money comes in, then it goes out. You don't have to pay for that.
I agree with that, but you do. The reason why I say that those.
But you're right. You can't look.
Those business owners need to recognize that their P&L looks more like a cost of goods business, and that their limitations of how much they're going to have to do to get the net profit they want must be treated purely that way.
Right. Well, in that example,
and that usually doesn't
scale up. They need to have more and more agents.
That's the reason why for a lot of people who operate that way, the real answer is usually a blend. Because if your cost of goods business is paying for your infrastructure, for you to operate on a high-level service person, remember in the first scenario, gross revenue minus expenses, net revenue, right? Before you have staff, you're operating at 70-80% net. You have staff, and now you're 40-50%. If you operate efficiently as both, which is not an easy thing to do, you might have the facility, the support staff, all paid for with the net revenue of the people who are also selling and using them. Now you're using the same facilities to help you sell, and whatever you're making 100% of it. So the people that we've seen, and I think our friend John's a good example of that. Mm-hmm. He's done a really good job of really operating both, and that's usually the best answer if you're going to get into those kind of businesses. We won't spend too much time on it, but I do think that, if you guys have deeper questions, I know you got to go, but for business owners who are looking at getting into a new business, you need to immediately identify how much upside you're going to have based off of what these two businesses are and how much bandwidth you're going to have to put into it. The good part about service businesses are usually your margins are better, but there usually is an attachment of your personal time to provide a service until you can hire other people to do the same, and the margin starts to shrink.
Yep.
And then on cost of goods businesses, they might have a scalability to it, but you may not be able to make a lot of money to it until it scales on a very, very high level.
Yeah. If you're trying to start a business, don't start a cost of goods business. Just go Google the profit margins for a restaurant and the profit margins for a plumbing company. It's going to blow your mind, the difference, because they're significantly different.
Yeah.
And service-based businesses are much easier to start.
They are easier to start.
Yeah. You for goods type of businesses, restaurants, things like that, retail stores, man, it's you really and I've never done this, so keep that in mind. But I would really try to find some investors that can start you from a cash perspective where you can feel comfortable running the business.
I mean, it's funny because I talked to a friend, and this will be my closing thoughts on it. And she was telling me about how she wanted to open a coffee shop.
Yeah.
And I tried to like warn her. And she immediately countered with all the reasons why she thought the coffee shop was going to work. And I had to pause her. I said, I'll call her Jen. I'm not going to use her real name, but ask for permission, okay? I said, Jen, I'm not warning you because I think it's going to fail. I think you're missing the point. I think your business concept sounds great. And as a person, I believe in you. I believe you have the capacity of making it happen. More than you know. My warning is, if it does work, you're only going to make X amount of money.
Right.
And if your location is only crushing it because you're great and people love working for you and people love seeing you because of who you are and all that stuff, if you're not creating a concept that isn't amazing without you in it, it's going to be capped of what that one location can make.
Yeah.
And you haven't spent a lot of I'm just saying my fear is that it is going to work. And it'll be golden handcuffs to a job that is paying you less than what you're worth.
Right.
The warning was not, it wasn't going to work. And it was like a wake up call for her to say like, hey, you probably have only talked to naysayers who are telling you why they think it won't work. And yes, those fears could be real. My biggest fear is that as a person who operates a business and owns one, right?
Yeah.
I saw how many hours Diane had to put into that dessert shop. And ultimately what she was making off of it. And I'm like,
it's a hard business.
Like, who cares if you're even if you're profitable, it's like, man,
yes,
all this for that.
The idea has to be great, and the math has to be great,
and it has to be scalable. That it was worth it for what you are worth.
Right. Yep.
Right.
Agree.
Yeah.
Agree. All right. Cool. We're gonna wrap it up. Thanks for listening. If you made it this far, sorry for Keane's audio at the beginning. That was my fault, as I'm gonna mention at the beginning of this. So, as always, I am Chris.
I'm Keane.
This is the Business Barbershop Podcast. See ya.
See you guys later.